The numbers are in, and they paint a picture of a nation in a buying frenzy. In January 2025, U.S. imports surged to an unprecedented level, reaching a staggering $320 billion. This figure shatters the previous record of $295 billion set back in March 2022. The reason for this import surge? A looming trade war and the specter of tariffs. American businesses and consumers, anticipating higher costs on goods from major trading partners, went on a stockpiling spree. They rushed to secure products before tariffs could take effect. This surge in imports, while significant, was not unexpected. It was a clear signal of the apprehension and uncertainty gripping the U.S. economy as the prospect of a trade war became a reality. The import surge was a nationwide phenomenon, reflecting anxieties across various sectors. From raw materials to finished goods, the message was clear: stock up now, before prices climb even higher. This buying frenzy underscored the high stakes of the impending trade war, with businesses and consumers alike bracing for impact. The trade war didn't erupt overnight. It was the culmination of months of escalating tensions and tough talk. President Trump, a staunch advocate for protectionist trade policies, made it clear from the outset of his presidency that he intended to reshape the global trade landscape. He repeatedly criticized trade deals he deemed unfair to American workers and businesses. Trump's primary targets were China, Canada, and Mexico, countries he accused of unfair trade practices and currency manipulation. The opening salvo in this trade war came in the form of tariffs, essentially taxes on imported goods. The goal was to make foreign goods more expensive, thereby making American-made products more appealing to consumers. The timeline of tariff implementation was swift and impactful. It began with a 10% tariff on $200 billion worth of Chinese goods, a move that sent shockwaves through global markets. This initial tariff was followed by threats of even steeper levies, creating an atmosphere of uncertainty and volatility. As tensions escalated, so did the tariffs, eventually reaching 25% on a wide range of Chinese products. China, Canada, and Mexico found themselves squarely in the crosshairs of Trump's trade war. These three countries, accounting for nearly half of all U.S. imports, became the primary targets of his protectionist policies. The tariffs imposed on goods from these nations were substantial and wide-ranging, impacting industries from agriculture to manufacturing. China, the U.S. largest trading partner, bore the brunt of the tariffs. The levies targeted a vast array of Chinese products from electronics and machinery to clothing and furniture. The impact on Chinese businesses was immediate and significant, as the tariffs made their products less competitive in the U.S. market. Canada and Mexico, both closely intertwined with the U.S. economy through the North American Free Trade Agreement, NAFTA, also faced significant challenges. Tariffs on Canadian steel and aluminum, key exports for the country, caused considerable friction between the two traditionally close allies. Mexico, a major supplier of automobiles and auto parts to the U.S., grappled with the implications of tariffs on its automotive industry. The surge in imports in anticipation of tariffs sent shockwaves through the logistics industry. Shipping companies, freight forwarders, and port operators found themselves grappling with an unprecedented surge in demand. Containers piled up at ports, warehouses overflowed, and transportation costs skyrocketed as businesses scrambled to move goods before tariffs took effect. ACM Logistics and Consulting, a leading logistics firm, reported a staggering 26% increase in shipments from China in January 2025, compared to the same period the previous year. This surge in volume strained the company's resources and forced it to adjust its operations to accommodate the increased demand. The strain on the logistics industry was evident in the rising costs of shipping. Cargado, a freight company specializing in U.S.-Mexico trade, observed a 12% spike in freight costs across the border in January 2025. This increase was directly attributed to the surge in demand for shipping services as businesses rushed to import goods before tariffs could be imposed. The situation was further exacerbated by the earlier Lunar New Year, which traditionally leads to increased shipping activity. Section 5. A Global Trade War. Retaliation and Countermeasures. The trade war initiated by the United States did not go unanswered. Targeted countries, feeling the economic pressure of American tariffs, retaliated with countermeasures of their own. China, the European Union, Canada, and Mexico all imposed tariffs on a range of U.S. goods, targeting key industries and agricultural products. China, in a calculated move to inflict maximum economic pain, slapped tariffs on soybeans, pork, and other agricultural products from states that were crucial to Trump's political base. The European Union targeted iconic American products like Harley-Davidson motorcycles and bourbon whiskey, aiming to exert political pressure alongside economic leverage. Canada, in a move that highlighted the strained relationship between the two North American neighbors, imposed retaliatory tariffs on American steel, aluminum, and a range of consumer goods. Mexico, sharing a complex and economically intertwined relationship with the U.S., responded with tariffs on agricultural products and steel, seeking to protect its own industries and send a message of defiance. Section 6. Bringing back the factories, Trump's vision for American manufacturing. At the heart of President Trump's trade war lay a deeply held belief. America's manufacturing sector had been hollowed out by unfair trade deals and the offshoring of jobs. He argued that decades of globalization had benefited other countries at the expense of American workers and businesses. His solution? Protectionist trade policies aimed at reviving American manufacturing and bringing jobs back to U.S. soil. Trump's vision was one of a resurgent America, a manufacturing powerhouse that would reclaim its position as the world's economic engine. He argued that tariffs, by making foreign goods more expensive, would incentivize companies to relocate their manufacturing operations back to the United States, creating jobs and boosting the economy. The tariffs, in Trump's view, were not merely about reducing the trade deficit or protecting American industries from foreign competition. They were about restoring a sense of national pride, of reclaiming America's manufacturing prowess, and of putting American workers first. It was a message that resonated with many who felt left behind by globalization and yearned for a return to a time when American manufacturing reigned supreme. Section 7. The price of protectionism. Economists warn of dire consequences. While President Trump and his supporters touted the potential benefits of tariffs, many economists and trade experts sounded the alarm, warning of potentially dire consequences for the U.S. economy. They argued that tariffs, while presented as a way to protect American jobs and businesses, would ultimately harm consumers and stifle economic growth. One of the most significant concerns was the potential for higher prices on consumer goods. Tariffs, by adding to the cost of imported goods, would inevitably lead to higher prices for businesses and consumers alike. This, in turn, could dampen consumer spending, a key driver of economic growth. Economists also warned of potential supply chain disruptions. Tariffs, by disrupting the flow of goods and services between countries, could force businesses to scramble for alternative suppliers, leading to delays, shortages, and higher costs. This could be particularly damaging to industries that rely on complex global supply chains, such as the automotive and technology sectors. Section 8. Consumers feel the pinch, rising prices, and supply chain disruptions. The economic anxieties expressed by economists were not theoretical, they were felt in the wallets of everyday Americans. As tariffs took effect, consumers began to experience the consequences firsthand. Prices for a wide range of goods, from washing machines and refrigerators to cars and clothing, began to creep upward, squeezing household budgets and forcing consumers to make difficult choices. The agricultural sector, a major target of retaliatory tariffs, was hit particularly hard. Farmers, already grappling with low commodity prices and rising input costs, faced the prospect of losing access to key export markets, jeopardizing their livelihoods and threatening to destabilize rural communities. The trade war's impact went beyond rising prices. Supply chain disruptions, while less visible to consumers, rippled through various industries, leading to delays, production bottlenecks, and increased costs for businesses. These disruptions, in turn, put upward pressure on prices, further exacerbating the financial strain on consumers. Section 9. A trade policy in turmoil, uncertain future for the U.S. economy. As the trade war escalated, it left a trail of economic uncertainty in its wake. Businesses facing volatile input costs and uncertain market conditions delayed investment and hiring decisions. Consumers, grappling with rising prices and anxieties about the future, tightened their belts and cut back on discretionary spending. The long-term consequences of President Trump's trade policies remain to be seen. Whether the tariffs will achieve their stated goal of reviving American manufacturing and bringing back jobs is a subject of intense debate. What is clear, however, is that the trade war has injected a significant degree of uncertainty into the global economy, with potentially far-reaching consequences for businesses, consumers, and the future of international trade. The trade war serves as a stark reminder of the interconnectedness of the global economy and the high stakes involved in navigating complex trade relationships. As the United States charts its course in this new era of trade tensions, the decisions made will have profound implications for the country's economic future and its place in the world.